Do you know that the futures market has a language and the average struggling trader is missing the most important skill in trading, and that is the ability to read a price chart? The story for most traders are the same. You come into the market, you get a whole bunch of bad common trading knowledge, you slap on 5 indicators to get going, to find success, and it just doesn't work. And it's actually madness, because the truth is you only need 1 indicator or none at all to be able to win consistently in the markets. When you can read the markets, it's like reading the same book over and over and over again. Just imagine truly knowing what the market could do next, truly knowing what's most probable next, truly knowing what should happen next, because hey, you've read this book before, right? You've read this book before. How much easier would it be to pass a prop firm challenge if you could almost read the future of the market? And if you need help passing a prop firm challenge right now, get my guide, get my free guide, Finally Funded. All right, I give plenty of tips to help you get over that hump and finally get funded. Just comment below, give me the guide, and I'll send that right over. Hang with me for a few more minutes. I'm gonna go over to the charts. I'm gonna show you how the markets do in fact have a language and how you can learn that language today to begin to increase on the sudden. Let's go deeper. All right, guys, so we are on the chart, all right? And we're gonna just talk about, you know, the basics of reading a price chart, because most people see a chart and, you know, they're like, this is a foreign language, right? This is mumbo jumbo. This means nothing to the average person. But once you learn how to read a price chart and read the language of the chart, all this is not random. All right, it is not random. That's why I can find repeatable patterns over and over again, because the market is not random, people. It is not random. It does the same thing over and over again, and it's like reading the same book over and over again. And I'm gonna show it to you here today. You're gonna see that the market moves in twos and it moves in a market cycle, and when you understand that, it's a great book to read every day. All right, so let's take a look at it. So let's lay out some rules, all right, because it's only a few and they're not hard. So well, first we need 1 indicator. I must say, I don't like calling it an indicator. To me, it's really not an indicator, but it is. So we're gonna come over here to indicators, and we want the EMA right here. And we need it to be 21. And I'm gonna make the color white. So this is the only indicator we're gonna need for this. All right, let me make that bigger because I cannot see that. Up that width a little bit. Yeah, too much. All right, now we're cooking. All right, so now we have a 21 EMA. All right, so now the games can begin here. So let's just lay out some rules, because they're actually pretty simple, people. So if prices are above the 21 EMA, we consider that to be an uptrend. All right, we are trending up. If prices are above the 21 EMA, if prices are below the 21 EMA, we would consider that we're in a downtrend. All right, and if the market is moving sideways, all right, the market is moving sideways, we are in a range. All right, so people don't know that the market only do 3 things, right? It can only go up, go down, or go sideways. So it's in a range. So the 21 EMA, most people use, you know, indicators for entries, and yeah, you definitely can use it for entries, but it's not really what I use for entries. I'm using the 21 EMA for direction. All right, the 21 EMA is going to allow me to read the direction of the market. So with this information right here, the market can only do 3 things: go up, go down, or range. The 21 EMA is what tells me what's happening. So now that we have that little foundation, right, of how we're going to use the 21 EMA to read the price charts, now all we have to do is determine whether we're in an uptrend, downtrend, or range, and then look for price action entries to take inside of those different market conditions. All right. So before we get going, once again, though, the market, the book, the story that we read all the time is this: trend up, trend break, retest a new high. Or we may be reading a story where it's trend down, trend break, retest a new low, right? That's the market moving in twos. It's also what I call the market cycle, all happening at once, all right? So with just that information, with understanding that the market can only do three things: trend up, trend down, move sideways, and understanding that the market moves in twos and it moves in the market cycle, we can take just that information. That's what we need to be able to read the market, all right? So now let's just go look at this day, read the market conditions, look for our setups, and let's see how they look. All right, so let's roll. We're gonna start beginning of the day. This dotted line here at 6 p.m. Eastern Standard Time, which is really the start of the day. I'm gonna start a little bit before because I need more price action to make a decision on what's happening. I need past price action to decide what's happening now. But what I saw right through here, we got a range. We got a range happening right here, okay? So let me show you this. How do I know it's a range? Look at the EMA. It's pretty straight across. When you get that straight across a roller coaster look, you're in a range, all right? So we have a range here. So we're in a range, we're gonna take range rules, we're gonna fade the tops, fade the bottoms, wait for a breakout pullback, which we get right here. We broke out, we pulled back, then we got a beautiful signal candle right here. Breakout pullback entry to go short. I would have went right there. We would just consider 1 point a win. 1 point is a scalper's profit. So on all these examples here, we'll consider 1 point being a win. That's a clear win, right? Now, let's look at that market cycle. Trend, oops. We have, look at this, trend down. This is a trend break, retest a new low. See that market cycle? So once that market cycle is over, now let me show you what you can do. You come from the top, we look, push down, first entry, push down, bam, right there, second entry long. You can go second entry long right here because that down market cycle is over. You've had 2 legs down, you hit a bottom. Look at the projection here on this candle, that was a sign. Then you get your second entry long right here, bam, you're off to the races, all right? Then after that, you get a low, push up, higher low. Look at the rejection on this candle, pushed up strong. This is a higher low entry, you go right there. Again, 1 point would have worked. So there you go, right? We got 3 trades in the first hour of the market being open, and it was all based off of just price action, reading the price action, all right? So now check this out. Let's stretch this across. All right, because this was a pretty good range. Now, look what happened here. We broke out the bottom, but it failed, came back up. We broke out the top, but look what happened. It failed, right? So when we have a failed breakout and it comes back strong like this, you go right there. You go right there. I'm not gonna try to call it a second entry short or nothing. It's just a failed breakout with a huge signal candle that came back in the range. You just take a shot right there, bam. You go right here short, and again, 1 point for the win. That one there, folks, that one falls through the floor. That one is the trade of the day. I mean, you get in this puppy. You get in this puppy at 44. You ride that down to, I'm getting out right here, 14. Goodness, 30 points. 30-point drop right there, folks. 30-point drop. That's a, man, you got enough contracts going. You just paid off a credit card debt. You might have paid off a small car loan. You might have paid the mortgage, all that in this one trade. This started at about 2 in the morning, and it was over at 4 in the morning. 2 hours, you made some money there, all right? So we run down. So what do we have here? If we're under the 21 EMA, we have a downtrend. So we got a nice downtrend here, right? Then we made this matching bottom. So again, we have a trend down. Here's the trend break. All right, but this is pretty weak. Then we tried to retest, but this is a pretty weak break. I really wouldn't consider this a break because now this is a break. We got a full candle above the 21 EMA. So at this point, we haven't had my trend break yet. We've just had a nice trend down. All right, so kind of got to be patient here. We probably don't go here yet. Let's see if I'm really watching this and I don't hit this, boom, came back up to the EMA. By the way, this is a second entry short from this low, push up, first entry, push up, go right there for the second entry short. Actually, let me back up. Yep, and mark that up, because before we do anything, that's actually the next trade, because we're back under the 21 EMA. So you need to go with the trend, which is down right now. We're under the 21 EMA. So you go right here, and that's another easy scalp. And you got more than that, right? But now when we don't make the new low, right? We moved up, we didn't make the new low. That's a sign, right? So we got a low, push up, come back. This is a higher low. This low right here is higher than this one. All right. Then we push up, but I don't like all that stem on there. So I personally would do nothing, but then we get another higher low. Here's this low. The body of it is higher than this one. I kind of like that. And then you get this humongous candle up. You can go right there. You can go right there because this leg here didn't make the new low. And whenever that happens, we're probably going to go in the other direction really strong, which we do now. And then you get a huge run up. That's a great run up. Then you get a high right here. So I'm looking at this as a push down, try to go back up. That's first entry. Push down, come back up again. Here's your second entry long. And I'm just reading the price chart. Here's your second entry long right there. Bam, you're off to the races. And what is this? Look, let's look at this. Here, that's leg one. When we enter on the second entry, which is center of the pattern, we're looking for leg two, because the market moves in twos. And bam, look at that, people. Look at that. From here to here, that's leg one. Then you get a second entry long in the center. You enter right here on the second entry long, and boom, it runs right up. What's the chances? Just what's the chances of it getting right to this point and then stalling? But that's price action. That's measure moves. So what do we have now? We got this trend down, but I've had two legs back, but we didn't keep going, right? So again, you could say, all right, we got this high here. We push down. This is a lower high all in one bar because it broke higher, then came back lower. I actually like going right there, I'll be honest. You could go right here. And why am I going right here? Because I've read the price action and I already know that we've had a trend up, trend break, retest a new high. This market cycle is over. So I'm expecting a reversal right here. That's the beauty of price action. That's the beauty of being able to read this price chart. So you go right here again, that's an easy win. It may come back and get you. Then you definitely, if you want to, you could go right here again. You can go right there, because this is another high, push down, come back, lower high. This high right here is lower than this one. This is a pretty good entry. You only get a little bit before it comes back, but it would be a win or a wash at least. Then you get another one. Look at this high, push down, lower high. This high here is lower than this one. So notice we're making lower highs, high, lower high, lower high, lower high. That's a sign that we're going lower, and bam. Now, if you take this one, that's the run right there, all right? Because what you're expecting is this, folks. We never got the second leg to this first leg here. Bam. So what we're expecting is at least a run down to here, which we don't get on this push, but it attempted, right? And so if you just go here, At 29, man, I'm locking in right here. 12. Again, that's another 17-point run. 17-point run, folks. All right. So this is pretty good trading day so far. Now look, we get the 17-point run, but look, we hit the same spot as back here. So guess what I'm doing? Time to mark up, time to box it up, because look at the EMA at this point too. Come back here, look at the EMA, down, up, down. That's roller coaster land. Let's box it up. We don't want to get caught and chop. So once we get to this low again, I'm gonna start from this low. I'm gonna put it where it touched, right? That's prior to the low. At this point, the high would be this high here, and I'm dragging over from there. All right, so right now, this is what I got. So once we come down and bounce right here again, once I see this stall, I'm starting to think about going long. Then we try to go lower here, couldn't. I'm thinking about going long. I may go right here. If I don't, once I see this rejection, oh, I'm definitely going right there. This is nothing but a range fade at this point. All right, we seen 1, almost 2, almost 3, 2. I mean, this is 2 touches. There was nearly 4 touches at this same area. And look at the signal candle here. Look at the rejection on the stem. That's beauty. You go right there and you ride the sucker up 2 legs. Now where are your 2 legs at? Here they are right here. Trend up, trend break, retest the new high. Let's see if it was a measured move also. I hope you guys are seeing how I'm reading this chart. And I do this every day. You read the price chart. That's leg 1, leg 2. By golly, Miss Molly, prices made it to the tick almost. And guess what happened when we got up? Well, guess what happened after those 2 legs up happened? We reversed. I'm not gonna even show no more entries, man. Let's see what happens once we come back down. Show it to you again. I'm gonna show it to you again with these measure moves right here. That's leg 1, pull back, leg 2, trend down, trend break, retest the new low right there. Boom. Look, when you hit the bottom here, what do? Anybody? You buy. You fade this range. You go right here. That's another 2 legs up. Man, this was easy money today. But you got to be able to read a price chart. All right, you read a price chart. This is not hard trading. All right, let's keep the range. Bring the range over. Yeah, if you can read a price chart, this is not hard trading. It's actually rather nice. That's why being able to read is, reading is fundamental. All right. So now we would have took this run up. You got the 2 legs up. Man, I'm telling you, if you see it installing right here, I know the top is here, but it actually stalled here before. I would be real tempted to go here off of that stall. Real tempted, because the top is probably not correct at this point. It's probably more like that. That looks, yes. If you go back, the top is probably more like that, because we were steady making lower highs, high, lower high, lower high, lower high. So we were steady making lower highs. And if you notice that, you go right here. And if you go right here, need I say more? But then if you don't go up way up here, you wait for the breakout pullback. Here's the breakout. Here's the pullback. You go right here on that signal candle. Bam, that's a beauty. All right, and you probably catch all that. Then it came back up and tested. You could go right here. This is also second entry short, push up, first entry, push up, second entry short. You go right there, that's a win. And then it came back and tested again. Now, if we're under the 21 EMA, so you should be counting from the bottom. So if you count from right here, push up, first entry, push up, that's another second entry short. You go right there. You go right here and boom, you're off to the races. Now, I love this situation because now that we've tested 3 times up here, we're going lower. We know that now. Once we get back under 21 EMA, hey, look for setups. Here's a nice high, push down, lower high. This high is lower than this one. How many times have I said that in this video? I'm telling you, it's the same. I'm reading the same book over and over and over again. All right. You go there on this lower, beautiful lower high, And then you get a wifey right after that. Red, green, red, you can go right here. You go here, here, or here. Let's just do this. I mean, look, folks. Look, folks. You go here, here, or here, and you catch the run of the week. 57.02. Man, I can't even find the bottom. It's down here somewhere. All right, it's down here somewhere. And I'm not, you know, this video is getting kind of long. I'm not going to be able to cover this whole day. But from here, I'm going to show you how you trend surf. From here, you just look for second entries and lower highs off the 21 EMA. I ain't even going to just mark them all up. I'm just going to circle these boys. I'm telling you, you go here, that's a win. You go here, that's a win. You go here, well, you really go here on the lower high, that's a win. You go here, that's a win. Actually, you can go anywhere through here. If your stop was up here, it would have been rough, but you would have eventually won. You go here, you win. You go here, you win. You go here, you win. I think you guys get my point, right? Read the price chart, right? That's my point. I mean, if we're above the 21 EMA, you're probably in an uptrend. If you're under it, you're probably in a downtrend. And if the EMA is straight across, you're in a range, and you play the game accordingly. If you're in a range, you play range rules. If you're in the trend, you play our trend rules. And we have entries for every market situation. We have entries for every market condition, because reading the market is like reading a book. And I've read this book over and over and over and over for months and years. And now I can read a price chart by just glancing at it, and I can tell you what's most probable to happen. It's not 100%, but it's better than most people. And I don't need any indicators. As I just showed you, you can find great entries in the market by just understanding the fundamentals of the market. Can only do three things, and the market moves in twos within a market cycle. If you can wrap your mind around that, you can change your trading journey today. Let's look at a few. All right, so then you get this, I mean, what a push down, right? What a push down. So, I mean, let's find the bottom. All right, and we hit the bottom. Look at the EMA, folks. So after you hit that bottom, you gotta box this thing up again. And this will save you so much heartache if you box up and stay out of unfavorable market conditions. Most people are losing because they're trading in unfavorable market conditions. When they're in the range, they're not playing range rules. And when they're in the trend, they're not playing trend rules. And not knowing the difference can make or break you. So as we see right here, we're in the range. Bam, right through there. That is official. So we've had a huge run down. Now we're in a range. Anything can happen from here. You just wait and play your next rule, which would be either fade the range or wait for a breakout and take a breakout pullback entry. All price action entries that we take every day by reading the ES futures market. All right, guys. Hey, I hope you enjoyed that chart lesson today. I hope you can see that, hey, the market moves in a certain pattern. You could call it a language. And once you begin to read that language, you just know, hey, the market moves in twos. We're going to have a market cycle. And once you know where we are in the market cycle, then you can predict what's most probable to happen next and profit from that prediction. All right. And again, if you need help to pass your funded challenge, grab my free guide, Finally Funded. I got plenty of tips in there that possibly can help you get over the hump and finally reach those profit targets. All right. Comment below, give me the guide. I'll send it right over to you. And until next time, my name is JD. And as always, I wish you increase on the Sutton. Bye-bye.